Good afternoon. Buenas tardes. There you go. As the voice said, I'm Robert Villarreal. I'm the Chief External Affairs Officer at Momentous Capital. Cool name, huh? And I'm also the treasurer of the OFN Board of Directors. And I'm very pleased to see 2,000 of you here today, and I get the pleasure of introducing Jodie Harris. Jodie, as you know, is the director of the Community Development Financial Institution, or CDFI Fund. She has over 25 years of experience in both the public and private sector, and she joined Treasury in 2007, where she managed grant programs and developed legislative and policy proposals on a range of issues with a focus on access to capital, community development banking, and financial inclusion. In 2019, Jodie was selected as the director of the CDFI Fund. Great timing, Jodie. But she was no stranger to the position, as she had served as senior advisor to another friend of ours, Donna Gombrell, who was at that time head of the CDFI Fund. Yay, Donna. While being the director of the CDFI Fund is not an easy task, it gets a little more challenging when you're on the precipice of the largest pandemic that we've ever seen. So, what was Jodie doing the last 3 years at the CDFI Fund? Well, obviously, she navigated us and the fund through the pandemic, and that deserves a round of applause for Jodie. Because she supported us as an industry right when we took a leadership position and the spotlight was shown on us, and her leadership helped get us through this. She also received, and we received, record-breaking levels of investment from Congress, including standing up new programs and deploying $1.25 billion through 800 CDFIs. Yes, a round of applause for that. And she's also put forth major changes to CDFI certification to ensure the integrity of the CDFI brand. She has shepherded all these changes with a steadfast commitment to the industry and to the communities that we all work with, work for, and care about. So please join me in welcoming to the stage the head of the CDFI Fund, Jodie Harris.
Good afternoon. Let me set up my personal teleprompter here. Thank you, Robert, for the introduction. As you mentioned, I'm the director of the CDFI Fund, and it is such a pleasure to be in person at OFN's 2022 conference. So, of course, I want to thank the OFN staff and the OFN board for the invitation to come to one of my favorite places, New York City. I was a Brooklyn resident for many years, so I'm really excited to be back. But of course, as people have mentioned, it's a bittersweet moment. It's wonderful to be back in person with my CDFI family, but we have to bid farewell to a cherished member of that family. Lisa Mensah has described in her own words, she will continue to be in the work that unites us, building strong and thriving communities, advancing economic opportunity, and fighting fearlessly for economic justice for all Americans. I hope that we are all able to continue to be in this work that Lisa has led for the last 5 years. Thank you so much, Lisa. I'd also like to take a moment to have the CDFI Fund staff who are here today just raise a hand. And I ask that, don't hunt them down and ask them when new markets is going to be announced, and we don't need your unsolicited comments on certification just yet. But when I walk through the halls, people stop and thank me. And I wouldn't be here if it wasn't for them and the other 70 or so people we have who are back at the office working tirelessly and have been working tirelessly for the last 3 years. So as you pass them and you see CDFI Fund on their tag, just stop, introduce yourself, and thank them for the work that they've been able to achieve over these last few years. I thought a lot about what I wanted to say in my message this afternoon. I certainly want to highlight the work that you all have done and the work of CDFIs and the CDFI Fund's accomplishment over the years. But I also want to speak to how we leverage this moment that we find the CDFI industry in. In my mind, nothing else more perfectly describes the work CDFIs do in distressed and underserved communities across the nation, especially when helping communities struggling to overcome a variety of obstacles. We have the economic effects and impact of COVID-19. We have cycles of economic deprivation faced in persistent poverty counties. We have the pervasive lack of financing needed to buy a first home, to start our business, or even just to cover an unseen expense in areas that have been abandoned by mainstream financial institutions. This year, CDFI program financial assistance recipients reported originating loans or investments totaling more than $38 billion. $38 billion. This included providing financing to more than 101,000 businesses and the construction of nearly 54,000 affordable housing units. Over the course of the pandemic, CDFI financial assistance recipients have collectively reported originating in excess of $76 billion in loans and investments. Now, while we're combing through and analyzing the data, so far, the CDFI Rapid Response Program recipients have reported lending or investing an additional $14.8 billion. And this number will no doubt increase as we get more information. So combined, since the beginning of the pandemic, CDFI, FA, and RRP recipients have reported lending or investing more than $90 billion. But what is truly remarkable about this is that CDFIs continue to outpace themselves in fostering economic opportunity. Just 5 years ago, 2017, financial assistance recipients reported $5 billion in lending and investing activity. Now that number is over $38 billion. That is an increase of more than 650%. No more are we working at the margins. We are making significant improvement in communities across this country. And as CDFIs have considerably increased their activity over the past few years, the CDFI Fund has also provided substantial support. Over the past few years, we have awarded in excess of $2 billion in grant funds, $5 billion in new markets tax credits, and issued more than $450 million in bond guarantees, with still more to come. We will soon be announcing, in the next couple of weeks, a $5 billion allocation of new markets tax credits. Early next year, we will announce the fiscal year Financial Assistance 2022 FA Awards, as well as $1.75 billion in CDFI Equitable Recovery Program awards. In recent years, we have seen tremendous growth in the CDFI industry and tremendous support for the CDFI industry and the CDFI Fund. And because of this success, because of this moment, I do believe that we're facing an inflection point. A heightened understanding among policymakers of the specialized roles that CDFIs play as conduits for economic recovery and facilitators of social and economic justice has led to unprecedented levels of resources and funding from the government, philanthropic, private, and social impact investor sectors. But this comes with increased demand for results-oriented data to quantify CDFI impact and activity, as well as the need for accountability to compliance and reporting mandates. As the stakes get higher, so will the demands of CDFIs to document and verify their results. CDFIs are no longer a cottage financial industry, and probably haven't been for a while now. CDFIs are market movers in our nation's financial ecosystem. That investors and governments should continue to fund CDFIs based on merely mission alone is becoming less and less a sufficient justification. I believe that the development of the CDFI's revised CDFI certification application can lead in this regard. In designing the new application, we were purposeful in setting high standards for mission, responsible products and services, accountability, conduct, and performance. The certification application may compel some CDFIs to adjust their practices. And we acknowledge that some CDFIs may not be able to meet certification standards. But as I've said before, CDFI certification is not for every financial institution just doing good work. It was never meant to be. It is for those who are working at the margins and beyond to consciously and deliberately make an impact. The CDFI Fund strategic plan seeks to promote the growth, reach, and performance of the CDFI industry. However, it does state that the CDFI Fund does not want growth for growth's sake if it comes at the expense of a strong community development mission. With this in mind, the application strives to maintain the integrity of what it means to be a CDFI from a mission perspective, but still provide the flexibility needed for CDFIs to grow and serve the hardest to reach and most distressed communities. In thinking about scaling CDFI resources, it is important to acknowledge that the CDFI Fund provides just one piece of the greater support matrix that CDFIs need to grow. A few years ago, the Urban Institute estimated that the annual community investment gap totaled more than $150 billion. That's annual, and that's sizable. To put it in perspective, the largest single direct infusion of resources into CDFIs in history was the $12 billion that was provided in December of 2020 to finance ESIP, RRP, and the CDFI Equitable Recovery Program. It still only represented less than 10% of this annual shortfall. And as hard as it may be to grasp and understand, though, it is unrealistic to expect that this level of investment from the federal government may not happen year over year after year. We have and we do continue to benefit from broad bipartisan congressional support. Thank you. This has enabled our annual CDFI Fund resources to steadily increase year after year. However, another hard fact to come to grips with is that there is a ceiling to that increase. Let me give you some numbers. The Equitable Recovery Program received over 690 applications. For the fiscal year 2022 funding round, nearly 40% of all certified CDFIs submitted either a CDFI program financial assistance or technical assistance application. For years, we have been saying that the demand for the CDFI program far outstrips the supply, and that has never been truer than it is today. But we are dedicated to finding ways to make sure that the CDFI program can continue to provide impactful awards to CDFIs, even in a high-demand environment. As we've mentioned, the CDFI Fund will not open the next round of the CDFI and NACA programs on their traditional schedule. The round will be delayed until 2023, but it'll be after ERP in 2022, so there will be some capital provided in 2023. But the round will be delayed until 2023 and will most likely be a double round combined with fiscal year 2024 funding resources. While I know it's not a favorite of everybody in the room, this time will provide us the necessary time to conduct public feedback on our program's applications and evaluation processes. While there are definitely some operational changes we want to explore to make the programs more aligned closely with how CDFIs operate, we're going to examine some really tough questions. We're going to look at what does it mean to be a small and emerging CDFI? What level of awards are most meaningful? How do we recognize innovation and impact and still be able to fund the core work? And more broadly, if scaling the CDFI industry cannot be done through federal investment alone, what can we do to incentivize and increase industry investment? Even with the improvements that the CDFI Fund can make, our programs are just one part of what CDFIs need to succeed and to meet today's challenges. I'm going to quote from Annie Donovan, who spoke at the 2019 OFN conference and was my immediate predecessor. And he said, invest in the development of your ecosystem. CDFIs striving to meet their mission know that this cannot be done alone, but has to involve partnerships and the development of local capacity. Contribute in ways that you can develop the ecosystem you are part of. This will help to expand your impact. I would add that that model, the CDFI model, is built on a foundation of public-private partnerships. Fostering these types of connections over the long term is one of the most viable ways to generate the level of exponential growth needed to consistently replace and grow CDFI capital. Recently, we've seen the collaboration of CDFIs in receiving and partnering with some of the nation's largest banks and philanthropies. CDFIs are making new partnerships with some of the most recognizable names in corporate America. We heard from Nextdoor and PayPal today. There's Google and Block and Netflix, just to name a few, all of which is centered on increasing the availability of capital and credit in underserved and minority communities. The newly formed Economic Opportunity Coalition, which has committed to investing billions in CDFIs and MDIs, is only the most recent reflection of the increasingly pivotal role our industry plays in supporting initiatives to advance equitable outcomes. As initiatives become more creative and innovative, and hopefully more frequent, we need to keep pace. The CDFI Fund will do its part to support this movement. By providing technical assistance, capacity building, and flexible capital, we hope that we can serve as faithful facilitators in this process. I know that over the next couple years, we'll still be navigating new waters. But I also know that we can have impact far beyond what we think is possible. We will be able to look at this moment collectively and know that it was our launching pad. There's so much more I would love to get into. How we need to diversify talent in our industry, how we need to leverage the power of technology, and how we should standardize our data so that it tells story and impact in a common language understood by all parts of our financial system. But my time is limited, and I have to go. So I just want to thank OFN for the time today. Even though we have different experiences and perspectives to share, we are all aligned around the common goal of generating economic growth and opportunity in underrepresented and underserved communities. The CDFI Fund remains dedicated to that goal and dedicated to supporting all of you in your work going forward. So thank you for having me, and I hope you enjoy the conference.